Millennials, I'm super disappointed. I just read that a survey that TD Ameritrade does every month just said that millennials have less stock exposure than all other client brackets that they serve. Now, TD Ameritrade has roughly 12 million accounts, and once a month they pull a sampling from that accounts just to see what percentage stock ownership different demographics have overall. And they call this, let's see, I have a note, they have it the Investor Movement Index. And so what it showed at the end of March is that millennials, for the first time ever, had less than what the average client had in stocks. Now, I'm concerned here for a couple reasons. First of all, if you're investing in stocks, money that you need in the next 1 to 5 years, that money doesn't really belong in stocks in the first place because stuff like this happens. The reason why is always different, but markets go up and down all the time. So if there's money that you're putting into stocks that you need in the next 1 to 5 years, it probably didn't belong there in the first place. So maybe some of this millennial moving money out of stocks was a result of that, but let's have that be a lesson learned going forward. The second thing to notice is that market losses are completely normal. In fact, they are the sign of a perfectly healthy functioning market because those losses are the cost of the higher expected returns that you earn in stocks over time versus a bond or a cash type product. So losses are normal. They're going to occur with similar magnitude and frequency as they always have. You never know when and why, but they are the cost of higher expected returns. Volatility is not the enemy. Now, that brings me to my final point. If you have a long time horizon, historically, investing when the market is down 20% or 30% has been a very, very good buying opportunity. So you, again, shouldn't be putting money in that you might need in the next 1 to 5 years. But if you have a long time horizon, and again, I'm really focused on the millennials because that's what this survey was showing was millennial stock ownership is now below average for everybody else. Millennials, particularly if you're investing for retirement, have the longest time horizon out there. So again, if you have a long time horizon, historically, market returns going forward have been much higher when you're investing dollars at a point at which the market is down 20% or 30%. So if you have questions, why don't you go to smartmoneyquiz.com? You answer 9 questions. I have all sorts of resources that I'll give you that are tailored specific to your situation. Talk to you later.